Howdy, everybody. Welcome to Liberty Call. Today is Monday, April 28th, 2025. Hope you're having a fantastical day on the interwebs. Back in action here in my office. We cut our trip short in Houston. Any clients out there who want to hear about the disaster my father left, my brother and I, we'll probably be talking about that at our upcoming meetings. But yeah, having an estate plan is very, very important. And this man ignored everything that I recommended over the last 19 years of me being in this business. So I guess that's his, one way of giving me the middle finger one last time because he was such a wonderful dad. So anyways, all right. Well, markets are on edge, kicking off a massive week. Big tech earnings are set to flood in. Fresh GDP numbers are expected to show contraction. And Trump's latest 10% tariffs are stoking new fears of stagflation. Whew, who would have seen that coming? Volatility is high, confidence is low, and the economic data fire hose is just getting started. So before we jump into the news and the markets and all that good stuff, I need some help from you. I need some thumbs up, a like, a share, subscribe, a follow, and press that damn notification bell because I go live and say occasionally some intelligent things. It's not every day, so if you got to check in all 5 days to see if I'm going to say something smart, it's usually 1 or 2 days a week. So, all right, well, let's get into the markets. Dow Jones was up 0.28% today, 114 points, closed at 4227. S&P 500 up 0.06, so basically flat, 3 points, closed at 5528. NASDAQ down 0.1%, 16 points, closed at 17,366. The VIX was up 1.17% today. It's at 2513. Canada up 0.36, Brazil up 0.15, and our friends in Mexico up 0.6. In Europe, Germany up 0.06, the UK up 0.02, France up 0.5%, Netherlands down 0.02, Spain up 0.75%, Italy up 0.31, Switzerland up 0.74, and Portugal down 1.01%. Russian exchanges, the MOEX up 0.88, RTSI up 1.02%, and the overnight markets, the Nikkei in Japan was up 0.38%. Australia up 0.36, New Zealand up 0.82. In China, the Shanghai down 0.2. The Shenzhen component down 0.62%. China A50 up 0.05. DJ Shanghai down 0.23%. Hang Seng down 0.04%. And the Taiwan weighted when it closed on the 25th up 2.02%. All right. So those are the markets for the week. Y'all feel smarter already? I know I do. Did you miss me? I apologize for not doing my show last week, but between cleaning out a house, it was hot as hell. I mean, granted, if you're from Houston, it probably wasn't that bad. The weather, I mean, my brother and his kids were sweating, and his wife. But for those of us from Colorado where it was winter, I mean, I had to shovel 6 inches of snow off my trailer when we left Saturday morning, head down to Houston the week before. So not fun. And so anyways, all right, well, let's jump into our weekly economic update and see what's going on there. Stocks pushed higher last week, spurred by the White House's reassuring comments that progress was being made with trade talks. The S&P 500 gained 4.59%. NASDAQ picked up 6.73%. The Dow Jones Industrial Average lagged, adding only 2.48%. And overseas markets increased by 2.86%. Markets rally. Markets opened the week lower as investors continued to fret about China trade tensions, but sentiment quickly shifted. Stocks rebounded Tuesday following news that the administration intended to de-escalate tensions with China over tariffs. The rally extended through 2 more consecutive sessions as investors responded favorably to reassuring comments from the administration. Markets were also encouraged after the president said he had no intention of firing the Fed Chair Powell. They also liked hearing Treasury Secretary Scott Bessent's comments that the U.S. had, quote, opportunity for a big deal, end quote, with a key trading partner. Who would that be? Mega cap tech stocks, which had been under pressure for several weeks, regained momentum during the week, leading the market's advance. All right, housing market update. Fresh housing data released last week showed the median price for newly constructed home was $403,600, and an existing home, $403,700, were virtually identical in March. This is unusual. Typically, the average new home costs more than average existing home. But last month, the median new home price, while the median existing home price rose, hit an all-time new high. All right. Key economic data this week: Tuesday, trade and balancing goods, retail and wholesale inventories, Case-Shiller's home price index, consumer confidence, and job openings. Wednesday is gross domestic product, the ADP employment report, pending home sales, personal consumption and expenditures index. Thursday is the ISM manufacturing, construction spending, and auto sales. Friday is the employment report and factory orders. Got a bunch of companies reporting earnings this week. Today, Monday, we had Welltower and Waste Management. Tuesday is going to be Visa, Coca-Cola, Booking Holdings, S&P Global, Pfizer, Honeywell International, Spotify, American Tower Corporation, Altria, and Starbucks. Wednesday is Microsoft, Meta, Qualcomm, Caterpillar, and ADP. Thursday is Apple, Amazon, Eli Lilly, MasterCard, McDonald's, I'm loving it, Amgen, Stryker Corporation, The Southern Company, Intercontinental Exchange Inc., KKR, and Co. Friday, we wrap up the week with Berkshire Hathaway, ExxonMobil Corporation, and Chevron. All right, so that is all the news there. Good stuff. All right, well, let's get to the market recap for today. U.S. stocks trade mixed on tariff angst and more mega cap earnings. All righty. U.S. equities traded mixed on Monday as investors balanced cautious optimism with new uncertainty about U.S.-China trade negotiations and awaited major earnings reports. Markets had extended last week higher, buoyed by strong results from Alphabet that fueled renewed enthusiasm for artificial intelligence stocks. The S&P 500 closed up 0.7% on Friday, while the Nasdaq jumped 1.3%. However, sentiment cooled after U.S. Treasury Secretary Scott Bessent contradicted President Donald Trump's earlier remarks, stating he was unaware of any ongoing tariff negotiations with China. Trump had previously suggested that he had been speaking with Chinese President Xi Jinping. Bessent later clarified that while, quote, very good, end quote, tariff proposals had been received from multiple countries, it was up to China to de-escalate the situation. Confusion over the trade status weighed on investor confidence, despite China exempting some U.S. imports from its retaliatory 125% tariffs. Meanwhile, attention is focused on earnings from major mega cap companies, Apple, Microsoft, Amazon, and Meta platforms, which together hold a combined market value of nearly $20 trillion. Microsoft and Meta are set to report Wednesday, followed by Apple and Amazon on Thursday. Analysts caution that while Q1 earnings have been resilient, the full impact of tariffs has yet to hit. Other major reports due this week include Visa, Coca-Cola, and Caterpillar, providing further insight into the broader economic landscape. Despite hopes for trade resolutions, Vital Knowledge analyst Adam Crisafulli warned that S&P 500 is near the upper end of its trading range, around 5,500, and should not be aggressively chased higher, especially as tariff risks and potential global recession fears loom. Probably some smart advice there. I mean, my personal feeling is that the market is massively overvalued and we're headed for some sort of a collapse. But, when it's going to occur, how much the Fed is going to step in and try to mitigate that and, keep things, keep the boats and all the high tides where they're at. Well, we shall see. I mean, if they do nothing, we'll go through a normal market downturn. Equity markets could go down 40, 50, 60%. It's not unheard of. It's happened, while I've been doing this as a career. So, it's certainly not out of the realm of possibility. It's sort of what I would expect based on the fact that we held off a downturn for more than a decade through the entire Obama administration and Trump's first administration. And then when we did have a downturn that was starting to occur, COVID mysteriously occurred and gave a perfect excuse to pour a bunch of money into the economy. Now, I'm not saying that they made up COVID to paper over a bad market and a bad economy, but you can make your own guesses of what I truly think. So, all right. Let's see here. Next up, got an article from Zero Hedge. Imported high volume staple goods from China are about to dry up. Oh boy, we're going to run out of cheap Chinese crap. The first wave of trade war disruption is now hitting U.S. supply chains, with the Port of Los Angeles seeing a steep drop in incoming shipments due to President Trump's 145% tariff on Chinese goods. Port data shows imports began sliding over the weekend with further declines expected through mid-May. Since it typically takes 30 plus days for shipments from China to arrive, retailers could soon face shortages of high volume staple goods. Goldman Sachs and the National Retail Federation predict sharp declines in cargo volumes over the next 2 months. Inventories remain stable for now, but leading shipping company Hapag Lloyd reports that Chinese exporters have canceled about 30% of their U.S. bound bookings, the worst collapse in modern history. According to Goldman's China export tracker, luxury goods are less affected, but cheap staples like basic electronics and household products could soon vanish from shelves. I see that as an opportunity for our American counterparts to fill the void. FreightWave CEO Craig Fuller notes that food and gasoline supplies remain stable, but warns that consumers may notice fewer choices, particularly for low-end products. This marks a dramatic shift from cheap plastic throwaway culture fueled by China's dominance in global manufacturing, often built on stolen Western intellectual property. Analysts describe this as the beginning of a larger supply chain restructuring as the U.S. and China deepen their economic decoupling, marking a transition into a more multipolar world economy. Shortages are likely through June. While inconvenient for consumers, some argue it could improve product quality and reduce waste long term. Yeah, there was a time where when you bought stuff, whether or not it was a remote control or a stapler or whatever, you fixed the thing when it broke. I mean, televisions, refrigerators. I mean, actually, speaking of a broken refrigerator, the refrigerator in my fifth wheel, when we got down to Houston, it was cool when we left, but when we got down there, the compressor wasn't working, and I wasn't pulling it out, while we were there to try and troubleshoot it. So that's going to be one of my next tasks is figuring out, do I need to replace the entire unit or just replace a component? But again, I'm a handy person. I know how to use a screwdriver and a hammer. So, but there's a lot of people out there who have never fixed anything in their lives. So, changing a tire is very scary to them. All right. Where was I? All right. We're down to our last article here. We're really moving along today. This comes to us via First Trust, Mr. Brian Westbury's Monday Morning Outlook. This week's is titled, Don't Watch, Cash on the Sidelines. So let's see what Brian had to say. The era of easy everything is ending. With inflation slowly returning toward the Federal Reserve's 2% target. However, the COVID era money printing has permanently distorted prices. Today's consumer price index is about 13% higher than it would have been pre-COVID. Inflation trends of 1.8% continued, meaning that while inflation rates may normalize, the price level for goods and services has permanently shifted higher for now. This inflationary trend has been long in the making. Since the Fed's creation in 1913, inflation has steadily eroded purchasing power, exemplified by the FDIC insurance limit rising from $2,500 in 1934 to $250,000 today. Given that the M2 money supply has nearly tripled since 2008, adjusting for this growth suggests FDIC insurance would need to be $750,000 today to match that expansion. Many argue that, quote, cash on the sidelines, end quote, could fuel higher stock prices. However, this view is flawed. When one investor uses cash to buy stocks, the seller ends up holding the same amount of cash. The total liquidity in the system doesn't change. Thus, while increased money supply can inflate asset prices initially, its ongoing effect fades once it has been fully absorbed. Despite stocks being down from recent highs, equities remain modestly overvalued, and further declines are possible even with high levels of liquidity in the system. The key lesson is that inflation is already baked in higher prices across the economy, and cash sloshing around doesn't automatically mean sustainable asset price gains. All right. So, Brian's a very, very smart guy, and if he's saying that he doesn't think prices are going to come back down, probably not. We're kind of stuck with where we would have to have a major devaluing or a deflationary event, that'd be a better word, where the dollar actually goes up in value in relationship to everything else: gold, silver, commodities, goods and services, equity prices, everything. And who really wants to have, the value of their stock portfolio go down 30% so that everything normalizes? I would. I'd be okay with it just because I'm a realist. I look at the broader picture. I'd be willing to give up my career if it meant, the greater good for the economy. But most people aren't like that. I mean, you see that with all these people who are losing their federal jobs, crying, "Oh, look, we have to fight this." It's like, fight what? The federal government doesn't have any money. It's $36 trillion in debt. And I mean, the American people at some point are just going to say, you know what? We're done. We're not paying taxes anymore. So, but anyways, we're not there yet, unfortunately. So, all right. Well, that's everything that I had to cover for today. If anyone needs anything from me, where do you go? DSAFinancialGroup.com. All your financial planning needs can be addressed there. So go to the website, give me a call, shoot me an email, book a meeting. You can do that there too. I'd be happy to help get you on track for your financial future. All right. Well, I hope everyone out there has a wonderful evening. Like I said, I'm back in the saddle here in my most comfortable chair. Well, it's not really that comfortable, but it'll do. I'm too cheap to buy a new one. Anyways, hope everyone out there has a great evening, and I'll talk to everyone again next time. Adios.